Guy. On Friday, we talk about things that make Friday very frugal. So Frugal Fridays. Today we're talking about, I've talked about a lot about people buying homes, whether it's your primary home or your vacation home or investment properties. I talked a little bit about refinancing, but today I'm talking more about refinancing. Refinancing, a lot of times, doesn't just include refinancing your current home. Sometimes it makes sense, not all the time, but sometimes it makes sense to refinance and consolidate other debts. I don't always advise this. Everybody's situation is different, because do you really want those debts to be on a 15 or 30-year mortgage? You're paying them over time more. You're adding to your, how much you owe in your home, but you are freeing up a lot of money each month. And then it comes down to, what are you going to be doing with those savings that you're saving? Sometimes you save anywhere from $300 to $500 to $800 a month. Everybody's situation is different when you consolidate debts and refinance. So if you're using that savings to pay off other debts, or to save for college for your children, or for some things that are worthwhile saving for, and you're going to be in that house for a good long time, then a lot of times refinancing, consolidating debts makes sense. But if you're just doing that so you can buy another vehicle, if you need another vehicle, that's fine. If you need to buy things that aren't going to last, if you're using the money not to save money for the future, or for the kids going to college, that type of thing, then we have to ask the question of, is this really a good idea? So I'm going to be kind of the unusual loan officer. I'm not going to try to get you to consolidate debt just so I can get paid more. I get paid by the volume I do, not by the type of loan you do, that type of thing. I get paid by how many loans I close each month and how much those loans were for. So I'm not going to try to push you into a program or into a type of refinance that doesn't work for you and your family. So how does Frugal Friday fall into this? Well, Frugal Friday falls into this because, first of all, you're not going to refinance your mortgage unless it's going to save you money. And a lot of times that means in lower interest rate. Now, I have had folks come to me and say, look, we want to go from a 30-year fixed mortgage to a 15-year fixed. And that lower interest rate is lower, but because you've cut your time in half from a 30-year fixed to a 15-year fixed, it's going to be a higher payment. And the people that come to me to do that is very few and far between, but they know this is a good idea for us because it's going to allow us to pay off this mortgage faster. It's going to be a higher payment, yes, but it's a lower interest rate, and that works fine too. So sometimes frugalness doesn't always mean saving money each month. For those folks who know they're going to live in that house the rest of their lives, is their goal to retire in that home, it means they're going to pay off their house faster. So frugalness looks different for different people. So what I do, my approach is I treat everyone as, how it's going to be the best way for this mortgage loan to save them money. Sometimes the best way is for them to save people money each month going forward. And for other people, it makes more sense for them to save money in the long haul. They can pay off their home faster and pay less interest. So just know that frugalness, for me, is not going to be just one size fits all. And I think it's what you want. You want to have a tailor-made loan program for you that's going to fit what your specific needs are. So give me a call. That's how we get started at 803-446-3270, 803-446-3270, or you can apply online at brianfoxworth.com. Right now, our interest rates are still the lowest they've been in over 3 years. So let's look at it and see what makes more sense for you. Have a great Friday and an awesome weekend. Talk to you guys later. Bye.